Good morning, everyone. It's a new week, and with that new week, let's have a look at the Nasdaq chart. Let's see what it has in store for us. So, on the weekly chart here, we see that price has taken this high here, and it went for internal range liquidity in the form of this volume imbalance here. It took also the lows here last week, so we can look for a continuation. We have also this low high here. So where is the next point of internal range liquidity? It's down here. We have this volume imbalance and this fair value gap, and when this happens, we have a fair value gap and the volume imbalance above it. This is actually an entire area. This is the gap here. We consider this as only one footprint. So that's pretty much clear on the weekly. We have the highs having been taken here, and price is going for internal range liquidity internal to this range here. So if we look at this is our range. Price started making its move from here. And this is the range on the weekly chart. Now, if we go to on the 4-hour chart, we can see that price has taken this low here, and we have news this week. So we have this change in the state of delivery. Price reacted from this 4-hour fair value gap here, created bearish order flow. So yeah, let me turn this off. We can think that price will reach lower on the short term, taking the lows here. Then we can look for a continuation all the way down into this area here. So let's mark this out. We have a bearish fair value gap here. We have one here, right? We have this one here from where the displacement had started on this last leg. Are we missing anything? Let's use this indicator to quickly see. No. So that's pretty much it. That's our chart on the 4-hour. So we do have a draw on liquidity, the lows here, and as you can see, they overlap pretty much with the equilibrium area of the weekly range. Now, moving lower on the 15-minute chart, the 15-minute chart tells us pretty much the same story. I have a lot of indicators here on the chart, but let's turn them off and then look at it one by one. So first of all, I have this OTE indicator. and this pretty much shows the high of the previous day and the low of the previous day. It marks out the equilibrium area, and you see here the OT, optimal trade entry. That would be for a bearish bias all the way up here above the high here. So it pretty much lines up with what we have said so far. So if price would trade back into this bearish 4-hour fair value gap and it reacts from it and creates a change in the state of delivery, inverted fair value gap to the downside, then we can look for a short all the way into the lows below. Right, and that's the idea. So having in mind this previous day range, let me turn that off and let's look at this indicator, the statistical mapping indicator, and what is it telling us. So this is telling us that if we are to continue bearish, we should sell above this manipulation area. So again, pretty much it lines up with the other one. Yeah, there we go. So we have the equilibrium of the range of the previous daily range here, and the idea is price to trade back up after taking this low to trade back up and giving us an opportunity for a sell in the premium of the previous day range, and that can be anywhere above this manipulation line, the equilibrium of the range, even the optimal trade entry here. The greater the confluence, the better, and the greater confluence is right here in this 4-hour fair value gap here. That's it. Trade safe.